Good morning, traders. Welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Now, unfortunately, today is one of those days, and this happens sometimes, where I could pretty much make an equal argument for the market going up today, down today, or sideways today. And so really until the market opens 30 minutes from now and we start to see what the trade looks like once the market is open, it's going to be very hard to make a prediction of exactly what to expect throughout the day today or this week. So what I'm going to do instead over the next 30 minutes is I'm going to walk you through how I see the market, how I see us currently positioned, and what each of those scenarios would look like. If we are just going to go sideways today, or we are going to go higher, or we are going to go lower, what would we want to see happen throughout the day that would give us an idea that, hey, we should be going long or short in our trades? Okay, so to start this off, let's actually zoom all the way out and we'll take a look at the monthly candles. It is often best to give yourself context on a much longer time frame before you zoom in and start doing, your TA on a shorter time frame, because the longer time frame gives context to the shorter time frame. Okay. All right. So longer time frame on the monthly, the market is one time framing higher. What does that mean? It means the market has momentum up. All that tells us is until we make a lower low on the monthly, which we're nowhere near doing right now, this could keep going. Now, obviously, it's not going to keep going forever. Eventually it runs out. You have momentum for a number of months and then you slow down for a few months, or you have momentum for a number of months and then you have a big pullback with price. You slow down, pull back with price. So it's not going to go straight up forever. We are aware of that. And it might be over. The momentum to the upside might be over. The all-time highs we have right now might be there for a while. Okay. But until we make that lower low on the monthly, we should not assume that. We should assume it could keep going. And that will get us on the right side of the market more often. So now let's zoom in and we'll take a look at the weekly and we'll look for differences. Well, in the weekly, we can clearly see that the momentum has been over for weeks now. Right? We had a balance area where the market was going sideways for a month. The market had a couple of weeks of momentum, and then now we had a couple of weeks of balance once again. So this is where things start to get really messy, because we've got balance over the last 2 weeks, which is partially inside of previous balance. Okay? And so that's where things start to get really tricky. To know the exact reversal levels of where the market might reverse, to know, whether the market is going to go lower or higher from here, it gets very, very tricky because we're inside a balance, which means anything can happen. Okay. It means you must be open to the idea of the market going up, down, or sideways. Okay. So now let's zoom in a little more and let's look for insights on the daily time frame. Well, if we look at the daily time frame, what were we obsessed with last week? We were obsessed with this trend line. Where'd my drawing tool go? It disappeared. There it is. Okay. So if you look at this trend line right here, the last time we came down to test this trend line, we had been previously making new all-time highs. There was an FOMC meeting, which caused the market to sell off, and we came back to back test this previous trend line. Okay. We got a bounce. Market couldn't quite make it to those all-time highs. So we came back to test it again. We got another bounce. Then the market was able to go make those new all-time highs. What was important to me was two things. One, that the trend line held. Okay. And two, that we made the higher low the second time. If we needed to go much lower, the market would have gotten below the low from that FOMC day. It would have gone much lower, but it didn't. It made a higher low and found support. So that's proof that people bought the dip, which was what created the momentum to head up and make those new all-time highs. Well, the same exact thing happened last week. Now, it wasn't as clean last week. We didn't just bounce off of that moving average, that trend line. We spent some time below it, both attempts. However, we did get a bounce, both attempts. Okay. And we did hold that higher low. We did make that higher low on the daily. So that is actually bullish. It is a sign that we could do this again. Maybe even do this again and head up and make new all-time highs. So that is sort of the reason to be bullish here today, is to say, listen, we back tested, we made higher lows, we brought in buyers. Now the buyers get what they want. They get the bounce. Okay. And we're monitoring to see how far they could push it. But the thing about a trend line, just like any other support or resistance level in the market, the more times you poke at it, the more likely it is to break. And in this case, breaking means closing below that trend line. So the fact that we've now tested it, 6 times means the 7th time has less of a probability of holding. The 7th time, we're probably going to have to sell off much lower. So while that trend line is feeling bullish at the moment, we are well aware of the fact that that bullishness can disappear if the market pokes back below that trend line again. Okay? So now let's zoom in and let's take a look at the market profile chart. The market profile chart, which is the chart here on the left side of the screen, this gives us a lot more nuance into understanding what the market did, because we can see the path that the market took. All that the candlesticks is showing us is, where the market opened and closed, what was the high and low of the day, and then what was the middle of the bar. So what was in between the opening and the closing. That's it. That's all that candle is going to show you. But if we look at it on market profile, we can see where the market spent time and how it got there and where the market brought in volume and why it brought it in where it in. What was that telling us? So last week, we were focused on momentum. The market had created a gap up. That was a sign of momentum. And so we assumed the market was going to keep going up, and we got this big trend day to the upside. Well, the next day, we were thinking if we can get above that daily high, we can keep that momentum going. And we did. And then again, the next day, we opened with another gap up, another sign of momentum up. So for these 3 days, the market had momentum. Well, what happened on that third day, on Wednesday of last week? The momentum came to a screeching halt. We hit a gap up, but unlike this day where we got a gap and go, that day we filled the gap and then spent the rest of the time and the rest of the day inside that previous day's range. So that was our first sign that the momentum up was coming to an end. What happened the next morning? Well, we got a gap down. That was a sign we were starting momentum lower. So this day, the first half of the day made sense. Coming back to fill this gap made sense because the gap was the sign of momentum up. Once we got the sign the momentum up was over, we start to look at old weakness that needs to be repaired, which was that gap that needed to fill. So the market coming back down to fill that gap, that was no big deal. But the fact that we continued to sell off in the overnight was a sign of strong momentum to the downside. It was a sign that this market wasn't going to hold that trend line, right? So when we opened on Friday morning, we were down here. I was thinking, okay, this thing's going to crash and burn. And I was just waiting to see what we did in relation to this trend line at the close of the day to know whether I should go home with puts or calls. Okay. So what happened though? The market opened and it just instantly retraced all the selling from the overnight. What did it do after it retraced all the selling from the overnight? It just went sideways inside the previous day's range. So much like this one came back into the previous day's range, right? And then just went sideways. And that was a sign that the market's move up was over. This one coming back up into the previous day's range and then just going sideways is a sign that the move down is over. So we're in a tricky spot here where the market is giving us signals of momentum down and up at the same time. Okay. We also have lower highs and lower lows. So the market is one time framing lower on the daily, which is bearish to see. So it's bullish that it retraced back above that trend line and stayed above it. It's bullish that it made a P-shaped profile, but yet we're now back to dancing right on top of that trend line again, which is where we have to be neutral. Okay. And we have to say this market should, air quotes, should have momentum this morning. We should be going up, but yet we're 20 minutes from the market open and we're significantly lower than we were at the close on Friday. So where's the momentum? Well, we just don't have it. So, okay, what do we do this morning to figure out what comes next? Well, there's three things the market could do here. And they're all pretty much equal probability in my mind. 33% chance of each of them. One is we might just go sideways inside yesterday's range. As of this moment, that is actually the highest probability in my mind, is that we just have a day that looks a lot like this one, where we just create a smaller bell-shaped curve and we kind of just chop around inside yesterday's range. That's what I'm predicting right now. But what would it look like if that's what we're going to get? Well, we would head down. We would get below this overnight low, okay, which is currently sitting at about 67.35. That might change because we still have 20 minutes till the market opens. But for now, that's the overnight low. And we would want to see the market dip below there, but then find support around 67.28. So for the intraday today, if the market finds support around 67.28 and turns around and comes back up, that is the market's way of telling us it's not going down today. Okay? It's either going to go sideways or it's going to turn around and start going higher. That's what support around 67.28 would mean. And it doesn't have to be 67.28 to a tick exactly. It's just this general area. So give it, 5-10 points of breathing room either way. The point is, if it pokes down below here and then comes back up and doesn't stay down here, it's neutral to bullish. Okay. Now, if the market pokes down there and it gets new selling and it gets resistance, that's extremely bearish. That significantly increases the odds that the market is going to make lower lows today, meaning get below Friday's low at 67.71. So any new selling that takes place below 67.28 today, to me, is bearish. It is a reason to get short. If you see resistance in there, if you see new selling, you want to be getting short in there, because the most likely move for the market today would be down, past 66.71. But that's very interesting, not just because of the intraday potential of it to take the market lower, but what would that do to us on the longer time frames that we were just talking about? If the market pushes down there today and we close down there, what have we done? We've broken this longer trend line that we've had, which is a sign of a serious change in momentum, probably for weeks ahead. So getting getting new selling this morning below the base of those single prints, below 67.28, is bearish, not just as intraday traders, but as swing traders as well. Okay? Which is why I actually think it's more likely we'll poke down there and then reverse and come back up, because the market loves to chop and grind on these really pivotal levels. And that's what I think we were getting at the end of the day on Thursday and Friday, is just chop and grind and chop and grind and chop and grind and chop and grind. So that's why I think that's what's going to continue today. So, okay, let's say the market finds support around 28, comes back up. Well, now we're neutral to bullish. We assume the market is either going sideways or going higher. So then what are we doing? Well, we're watching every potential resistance level to see if we get resistance. If we do, it's a sideways day, and we want to act accordingly. We want to assume it's going to be a choppy sideways day. If we look below that overnight low, come back up, and there's no resistance, and we just immediately push straight up towards the overnight high, well, then that's a sign the market wants to go higher today. So the first thing we're watching for is what happens down here. Do we get new selling or do we reverse and come back up? The next thing we're watching for is resistance inside the overnight range / the upper end of yesterday's range. If we get resistance, we assume sideways. Okay. Let's say the market gets up to, it could be either Friday's high at 67.96, or it could be the overnight high around 68. We'll call it 68.02. Either one of those areas. If we get a look above and fail, so the market pokes up there, but then it can't bring in new buying and keep going, instead it fails and pulls back in, that is a sign of a sideways day. And we should assume the market's going to go sideways the rest of the day. So if we get the look below and fail of the overnight low, and then a couple hours later we get the look above and fail of the overnight high, it's going to be a sideways day today. Sit back, relax, and enjoy the chop. Okay? If we get new buying above Friday's high, above 96, we look to test the overnight high at 68.02. If we get new buying up there, we monitor for continuation higher. Okay. So it's pretty simple as far as I see it in terms of analysis this morning. 1, we have to wait for the market to open. 2, we have to see it as a chop zone between 67.28 and 67.96. Yes, that's an enormous range. I get it. I hear you. That's a 60-point range. That's a big range to sit around and do nothing. But for the first hour of the day today, that's, in my opinion, the best thing to do inside that range, unless we get the look below and fail. If we get the support down here, the market is viable to catch the intraday move up. But other than that, other than testing this balance area low and finding support, there's nothing to do in here. You let it go up, you let it go down, you let it go up, you let it go down, you let them chop it as much as they want, as long as they need to. Because if they break either end of this range with new selling below or new buying above, it's going to be an enormous move. Okay? The market is going to make a big move today if we do that. Or I should more comfortably say in the days ahead, we're going to make a big move. And if we fail at either of those levels, if the market turns around and comes back up or turns around and comes back down, well, then you know we're going sideways the rest of the day. So there's plenty of money to be made either way, right? Whether we get resistance and we look for those shorts, there's plenty of money to be made short. If we wait for the fail and then we go long, there's plenty of money to be made on the long side and vice versa. So we don't need to rush into trades first thing in the morning. We don't need to instantly be going long or short just because the market might go up 30 points and come down 30 points. And I would hope the last few days have taught you that. I would hope the last few days of trading would have taught you you don't have to force trades first thing in the morning. When you've got this kind of volatility, when you've got these large of ranges, which may continue or may not this week, but we'll assume as of now it is going to continue, then there's plenty of money to be made. You don't have to force your way into trades too early. You can wait to be confident you understand the outcome of the trade, then you start to enter your position. Any questions on any of that from the chat? If you are watching this in the Discord, just head to the Futures-Charles tab, and I will answer your questions there. Griff the Cat says, when you say new selling, what do you mean? Okay, so this is a concept. I get asked this question a million times. This is my best way to answer it. Resistance is new selling, support is new buying, right? It is simply the idea that there is a change in the market. So let's take the overnight low as an example. Drawing tool. There you are. Okay. So let's take the overnight low as an example. What happened in the overnight when we came down here to this area? We'll say between 67.39 and 67.35. What happened? Well, both times we reversed and went back up. We came down in the J period, and you can see less and less volume as we go down. So there was 2,400 contracts, then 1,600, then 600, then 300. So the volume tapered off. That means people stopped doing business the lower the market went. And so it had to turn around to get people to do business again, right? It did it not once, but twice in the J and the K period. So as of this moment, and I know we're dancing right on top of it right now, but as of this moment, what is the market doing here? It's finding support. Right? Buyers are stepping in. You're running out of people selling and you're bringing in people buying. And that's causing the market to reverse and start going up. So if intraday today, the market pokes down there and then does it again and turns around and comes back up, what is the market telling us? That nothing has changed, that we're just in balance. That's our balance area and the market's in balance. Okay? That's what we call a look below and fail. But now let's say instead of that happening, what if the market pokes down there and then this area becomes resistance? It has been support. Right now it is support. But let's say it starts to become resistance and all of a sudden people start to short there and the sellers are stepping in. That has to be new sellers. Okay? Because let's say somebody got short up here at the overnight high around 6,800. they're an old seller. They're short right now. If somebody got short here at 67.85 or at 67.70 or right here at 67.45, right? Any of those sellers, that's old business. They're already short the market. So if the market goes down, what can sellers do? What option do they have? Either stay short or take profits on their short. Taking profits on the short turns them into a buyer. So as the market goes down, you have less old sellers in the market because on the way down, some of those sellers are taking profits, right? So if the market was going to do that today, if the market was going to poke below that overnight low and turn what is now support into resistance, that would have to be new sellers. That would have to be people that today, intraday, are choosing to get short the market. Well, if you've got old sellers that are staying in the trade because it looks like it's going to keep going down, and you've got new sellers that are entering the trade because they think it's going to go down, what is the market going to do? It's going to go down, right? Because you have more sellers than buyers at that moment. If the buyers are going to buy, they're buying support. So if you flip and turn that into resistance, they're not buying anymore. So if there's no new buyers, but there is new sellers, where does the market go next? It goes down. Well, let's just play that out the opposite way. Let's say the market pushed down here, it gets below that overnight low, and it doesn't turn it into resistance. Let's say it starts to come back up in that overnight range. Well, then it doesn't matter where the shorts got short, whether they sold up here or they sold in here or they sold right here or they sold down here. It doesn't matter. As the market is going up, every single short is losing money. Doesn't matter where they entered. They are all at the same time losing money as the market goes up. So what happens as the market keeps going up? The higher it goes, the more of those shorts that decide to cover, whether they got in up here or they got in down here. The market going up makes them think, fuck, I don't want to be short anymore. That creates new buyers. So what you basically have at the overnight low and the overnight high today is what we call a look above or look below and fail level. This is a level where either the market's going to look down there and fail, in which case it's going to come all the way back up, because you're going to squeeze the sellers, or it's going to go up to the high. And if it doesn't find new buyers, it's going to fail and come all the way back down because you'll squeeze the buyers from the way up. But if you get new buyers at the high, you're going to get continuation. Or if you get new sellers at the low, you're going to get continuation lower. So very simply put, new selling is turning previous support into resistance. New buying is turning previous resistance, right? What was resistance Friday? This area up here. What was resistance in the overnight? This area right here. So new buying would be getting the market up there and then turning those into support. That's the new buying. And if you can just obsess over this one concept, like at whatever point you're thinking about entering a trade, who is the current business in the market? Is it more net short or more net long? Meaning, how did the market get to where it is right now? Would more people have to be short or long? And then what is the place on the chart? What is the price level where that could suddenly change? Now, most of the time you can figure that out by just looking at market profile. Another great tool is Bookmap, right? Being able to look at the order flow, you can also see in real time as these changes happen. If the market is finding support, for example, and there's a lot of liquidity below price, and the market comes back down into that level to test it as support again, but all of a sudden that liquidity disappears below price, or all of a sudden a bunch of liquidity starts to appear above price, what are you witnessing? You're witnessing those sellers taking profits and those new sellers, getting short. You're seeing them prepare for that next break that the market is going to happen. So if you look at the price chart through market profile to figure out where are those important levels where business changes, where longs become shorts or shorts become longs, and then you watch Bookmap at the moment that you're there, you can literally see these things trigger and you can see them happen. And you can go, there it is. That's the look below and fail. We're heading back up. Or there it is. That's the new selling. We're heading much lower. And then you just get in as quickly as you can once you have that information, once you feel confident. We got Rich in the house. 4 minutes till the market opens. Let me know if you have any questions. Derek is here. Good morning to you. Bill, welcome, welcome. We got Trader in the Discord. Good morning to you. And the Great Horn Bull, or the Green Horn Bull. Good morning to you. Laura in the house. Will is here. Trevor. Pete the Cat. The Infrequent Dead. The Infrequent Dead was taken. You had to add the 6289. Welcome. Good morning to you. He says that gap fill on Friday was wild. How have you been? Any karaoke today? It was wild. It kind of took me in phases. Like the first move down, I felt like it was over. But then when they started the momentum to fill that gap, I was like, okay, they're going for a gap fill. But at the very end of the day, the last hour and a half, I really thought we were going to bounce and come back up. So that threw me off quite a bit and got me very bearish to go into the next day, which then opening with a gap down the next day got me very, very bearish to where I missed the gap fill on the way back up. And I was very sad about that, but it happens. Will there be karaoke? Always. You just might not be able to sing along because I might be making up the words as I go. Jesus says he has a question. When we purchase your program, will we be doing this type of analysis every day? It's a great question. So I have multiple different programs. The main thing that you're probably talking about is the Pirate Traders Brigade. So if you see the link at the top of the description on the right side of the screen, it says piratetraders.io/join. That is joining the Pirate Traders Brigade. So it's $20 a month. And yes, I do this every morning for the first hour of the day. I go through my analysis. I send out an email pre-market telling everybody, what I think pre-market, which is basically what I just did over the last 30 minutes. And then when the market is open, I live stream for the first hour where I discuss, what I think the market is going to do that day. The first hour is the most pivotal to me. We call that the initial balance. And it's important. It's different than the rest of the day because a lot of times the market doesn't really know where it's going to go on a particular day until the end of the first hour. That's why we call it balance, because a lot of times the market has to try to go up, try to go down, kind of go all over the place first. And then once you've got a majority of participants long or short, based on however the market moved, then you get the move that's going to happen that day. So this isn't me predicting what's going to happen today, but just as a possibility, for example, the market could open, push down, start to come back up, then come down again, then come back up, then come down again, spend a little bit of time chopping around here. Well, that's probably going to get a lot of people to short the market down here near the lows. So then if out of nowhere, all of a sudden it starts to come back up, it'll happen very quickly. We'll just back, because you'll squeeze all those sellers. And then they'll do the same thing again at the highs, and then they liquidate them later and they come back down. So that's generally what's happening in the first hour, which is why that's the one where traders need the most reminder to wait for market generated information before forcing their way into trades. Speaking of which, as I said, it is a chop zone between 67.28 and 67.96. So I got to see us break out of this chop zone with new selling below what you see as this yellow line to get bearish. Otherwise, the higher probability is that we're going to turn around and come back up. Now, I'll just give you a nuance right out the gate to be aware of. It feels bearish. It feels like the market is going down, But one, we have a weak high because it's right at the opening price. And two, we just took out a ton of stops at the low. Okay? So the only way we're going to keep going lower now is if we can keep taking out hundreds of stops with each poke to the downside. Now, maybe we can, and we'll be watching the stops and iceberg setting on Bookmap to see that. But if they don't take out on the next poke down, if they don't take out hundreds of stops, that'll be it, and it'll turn around and come back up. So right now, this is not bearish yet, even though it might feel like it. This is just testing that chop zone low to see how many people they can get to short down here. So there you go. Second poke. Not only did they not squeeze a bunch of buyers there, they actually brought in new buyers. People bought that dip. So there you go. Right back through the week opening high. This is why you don't want to get too bearish too quick. Because now we're in this scenario that we talked about where no matter where people shorted up here, each tick the market goes higher right now, more of them are giving up and they're getting stopped out. So you're going to start to see sellers get stopped out. So now we're looking for resistance. The sooner we get resistance, the more bearish it is. The later we get resistance, the more likely we're just going to chop for hours. And we are pushing into the first potential resistance here at 67.41. So we're watching to see, do we get resistance or not? Okay, we did not. So that means we're going to take out some more sellers. Boop, boop, boop. Next little poke up. Next resistance is at 53. Stagit from the Discord says, what would be the best way to learn what you were showing in a more systematic way? Well, I teach a workshop. You literally cannot sign up right now because I haven't set it up yet, but I've decided I'm going to do one in February. So just stay tuned. If you want to, you can go to my website, piratrators.io, and you can sign up. Sign up for the, boy, that's huge. That's unnecessarily large. You can sign up for the email list right here. Just put in your name and your email, and you'll get an email about that workshop. So I only teach those workshops a couple times a year, and I teach everything in depth from beginning to end to build all the concepts. It's just so much to cover. I can't do it like on, any one random day. It takes 2 weeks of 4-hour-long lectures to get through everything I have to get through for you to understand it in detail. Okay. The best thing to do in the interim between now and February, when I'm going to teach that workshop, would be to just sign up for the brigade. And that link is at the top of the page, piratrators.io. So if you go there, you sign up, you get me all day, every day, and just ask lots of questions. Anything you don't understand, just ask me in real time, and I will give you the best answer I can. Okay. So far, what have we seen? They tried to take the market lower. They couldn't take out more stops, so they reversed to come back up. Now they're taking out sellers from overnight, right? So we're at the next potential resistance right now. If they don't reverse the market back down here, we're going to make our next move up towards 67, 63. This area right here. And that is just because each new move that we make up, we take out more stops. You can see it on the stops iceberg setting right here. Let me just zoom in a little bit. So we started to come out. You start seeing us take out stops. That's those green dots. Stops, 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 over and over again. That's sellers. That's old business getting out of their trade. And so you're like, oh, this is bullish, Charles. We're going to the moon. No, it's not. That's what sucks about a chop zone. We now know, since we didn't get resistance at, just now at 50, we know that we're heading up towards 63. Okay. But that's all we know is that next little push. We could get resistance there and come all the way back through the open, or we could keep going up. We just don't know. So that's the thing about a chop zone. You can know it's going to go up because it couldn't go down, but you're not sure how far up until you wait and see where do sellers step in. And we have not gotten any sellers yet. Right now, we are just squeezing the old sellers from the overnight. The market has not picked a direction for the day. So there you go. Boop, boop, boop. Took out another set right there. See, each tick the market goes higher, the more of them you squeeze. Inside the chop zone, where they will chop it up. All right, here's the resistance right here. So either they reverse the market back down from here, or we're heading up to the next resistance, which is around 73. And so we're looking for those sellers to step in. If not, we continue our move to the upside. And this is what you guys got to understand throws so many traders off. They see the market open lower than yesterday and they instantly get bearish, right? They see the market turn around and start going up and it's pop, pop, pop. And look how fast it's moving. Oh my God, it's just going up, up, up in a straight line. And so then they get bullish at the high and they go long. And then it just sweeps right back down and takes them out. That's what chop is. That's what a chop zone is all about. It's a place where nobody is really confident yet what's going to happen today. They're all just guessing. And the ones that are just guessing are very easily squeezed. So the market doesn't have to work that hard to start squeezing the sellers, and that gets them a big move up real fast. And then they don't have to work that hard to start squeezing the buyers and get a big move right back down real fast. And so all we can do is know where those important reversal levels are and watch what happens when we get there. And so far, I'm not seeing any strong resistance here. So that increases the odds of another poke to the upside. We just keep on squeezing sellers from the weekend. We just keep on squeezing. Sellers from the weekend. Okay, so as we work our way up to repair this weak reference at 67.79, or sorry, 67.70, that's a magnet right now that's pulling on price. Okay, so if we've got some momentum up, which in this case is shorts covering, that's our momentum up, it's a good target to think the market will get there and repair that weak reference. However, once it passes through that level, once it gets to 67.72, then that weak reference is gone, and so is the magnet. And that might be all the market needs to turn around and come right back down to the open. So we are watching for resistance. We haven't got it yet, but it's a-coming. And perhaps it will be right when we repair that first weekend period high from yesterday. I'm watching the tick chart here as a sign of resistance. So on Bookmap, we're looking for a change in the order flow. Do the orders below or above price randomly switch? And also we're looking for the little stops and icebergs indicator to tell us we're taking out more stops, to figure out where will this resistance be. Somebody else getting in at market right now. Chasing the highs as they do. Where's the two largest nodes of volume so far intraday today? At the high of the day and at the low of the day. Right? Went down, got everyone short. They got in at market and then they got squeezed. Now it's setting up to do it to the buyers. Step in the zone, the chop zone. Okay, so now what we're watching is the halfback. We got resistance. When we're in a chop zone like this, the best way we can guess while we're in the middle of the yellow box, right? The best way we can guess whether we're going to end up breaking the high or the low is based on once we get resistance, can we turn the halfback into support or vice versa? So we just got some resistance around 64. I don't think the chop is over. I think we're coming back for that high. So my question is, where is the support going to be to come back? And I'm watching the halfback. The frequent says, how can you confirm the new money buyers versus shorts being squeezed and vice versa? How do you know? Well, the first step, as we discussed, was the level. You got to know where is the level where buyers will get squeezed as opposed to bring in new buyers, or a level where sellers will get squeezed as opposed to bring in new sellers. Okay. So that's step one. You just got to know where to look. So for example, right now, as the market is going up, who's getting squeezed right now? Sellers, right? So you're saying, where are the sellers? Like, where did they get in? Well, they could have got in at the overnight high. They could have got in at yesterday's high. So basically anywhere in here is where those sellers could have gotten in. So as long as we keep going up in there, there's more sellers to squeeze and it can just keep going. Okay. Now, if we got above that area, if we got up here, well, then we'd have to bring in new buyers to keep going, because we can, that's what you got to understand. We can come back to 6,800 purely squeezing sellers. We don't even need any new buyers. Just convincing people that are short to get out of their shorts can get us up there. But for us to keep going, we need new buyers up there. Okay. So that's the first question, is what is the location that matters? Then you look for the market's behavior. So the best way to read the market's behavior is using tempo, which means the speed that is changing. Okay. How fast does it go up a point or down a point? And then the other thing is the volume. Where is volume trading? And so if you look at the volume profile, you can see right now we're bringing in a ton of volume. We got these big red candles, but we're at the high. So for us to be staying up at the high so far today and be bringing in volume, what does that volume have to be? It has to be buyers. Because if we poked up here and a bunch of sellers got in, the price would go down. Okay, so the fact that we pushed up and we stayed up and we're bringing in volume is a sign that we are bringing in more buyers. If we're bringing in more buyers, what is the market likely to do next? Its next move is likely to be up. So the first thing we're watching is that volume and where in relation to where price is. You got to put the two together. Price is where we are on the axis, what number, and then volume is where is that volume in relation to that. If we started at 67.34 and now we're bringing in volume at 67.64, we've got buyers. And if we've got buyers, what's the market going to do? It's going to go up. Okay. So that's the next thing you got to watch for. Now, if it is going to be shorts or longs, really, either side, if it's going to be one side of the market is getting squeezed, you just saw it. Right now, pop, 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 pop. You hear that noise? Pop, pop, pop. You see how quick the market is moving? Look at how long it took to get from here to here. And then look at how quickly we got that same distance from here to here. Same number of points, but this one we had to grind and grind and grind. This one we just went boop, 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 and we instantly went there. That's the difference. Grinding is new business entering the market. Fast moves, that's old business getting squeezed. In this case, sellers giving up and getting stopped out. And we can also just look at, this is what the stops and iceberg setting on Bookmap allows us. We can literally just look and see that little move from 67.64 to 67.69. That was this guy, somebody who was short 130 contracts getting stopped out of their 130 contracts. And so now we know this little move up, that was not new buying. That was a seller getting squeezed. So if the market is going to keep going up, what do we want to see up here right now at the high? More volume coming in, right? That would tell us more new buying and the move is going to continue. And so we just obsess over every little move the market makes. Where is it in terms of price? What is happening in terms of volume and in terms of tempo? And when we recognize those changes, it gives us an idea of what to expect. So right now, the most recent change, and I'm literally doing second by second analysis right now, which I normally don't do. But right now we've got tons of liquidity showing up above price. So what are they trying to do? They're trying to scare price away. They're trying to get a dip. They're testing to see if there's new buyers or if it's just squeezing sellers. So if we now turn 67.64 into support again, that'll be the next slingshot. If we don't, we got to come back to the halfback. 67.49. Jason says, been with Charles for 4+ years. He's active for more than the first hour most days. And if it's the market's move, if the market's making a move, he's live. Yes. So I do live stream most days, all day. I just am not active. I don't answer questions in the chat and stuff like that. I give you guys my undivided focus for the first hour, and then I focus on my own trading. But of course, I'm usually still hanging out. I'm just not answering questions as much. Sook in the house. Good morning to you. Thank you. The Hawk. Griff says no new selling. Correct. We have not gotten any resistance yet. But as I said, once we repair 67.70, that's one major magnet gone. So if there's a strong hand seller that's looking to short this market, anything above 70 is very interesting to them. So I suspect we're going to get that resistance any minute now. But if we don't, it'll be bullish to test yesterday's high. Sook in the house, good morning to you. Crypto Rider is here. Willie T. David Cooper. David Cooper says, I'm a noob. What's this halfback you speak of? And how do we find it? So great question. New person, David Cooper. The halfback is this little white line that you see right here. So most of the time, this isn't really that big of a deal. I don't pay a lot of attention to it. But when the market is in a chop zone, as long as it's inside this yellow box, that halfback is very, very important. Because like I said, if we get resistance now and come back to the halfback, and then that becomes support, it's going to move up a little bit with price here. But if wherever it is when we come back down to it, if that becomes support, then the market is more likely to break higher. Whereas if it doesn't, it means we need to keep chopping. And as far as what the halfback is, it's literally half the range. So between the high and the low of today's session, whatever that may be, 50% between them, that's the halfback. So each time the market moves up 2 ticks, halfback will move up 1 tick. Okay, so we repaired that first week reference. Now is where we find out. Is there really new buyers that want to keep this momentum going, that want to get up there to yesterday's high? Or were we just squeezing sellers? We will also here find out, are there new sellers that want to start to short here to try to get back down to the opening price? Just like this area at the overnight low was our tug of war area earlier this morning, this area between 74 and 80 is our new tug of war area up here. And whichever way it breaks, that's the next move. Always very interested when I suddenly see liquidity nodes disappearing. They've been keeping these large nodes of liquidity right under price. If that were to suddenly disappear now, it would give us a pullback. David says, how can we tell if an iceberg is a buyer or a seller? Red means they're shorting. So when you see the 2 little triangles and they're shorting, it'll be red. When it's green, which I think we just got, although it's covered up by that other thing. When it's green, that means it's buying. So down here at the low, that was an iceberg that was buying. And then right there at 65, that was an iceberg that was selling. The stops, it's the inverse. So if it's a green circle with a number next to it, that's a seller that got stopped out. They got forced to buy. And if it's a red one, that's a buyer that got stopped out that was forced to sell. And you can also use the volume dots, generally speaking, particularly at a higher low of the day. So the volume dot is showing the delta between buyers and sellers. So if it's a green dot, it means there were more buyers at that moment than sellers. If it's a red dot, more sellers than buyers, right? So if the market pushes up and it creates a red dot at the high and then it starts coming down, that was just resistance. Okay. But if it pokes up and it creates a green dot and then it starts to come down, that was somebody getting stopped out. And you want to know the difference, because if it was just somebody getting stopped out, the market will likely find support and come back up for it again, because it'll keep testing to see if there's more people to get stopped out. Whereas if it was strong resistance, if you get that big red dot and then it reverses, well, that was sellers getting in. And so the pullback is more likely. So you watch all these little things, and they just give you little nuances to understand. Who is doing business and what business are they doing? Right now, the buyers, air quotes, are still more shorts covering than new buyers, which is a reason for the market to run out of steam and need a pullback to the halfback. I suspect we have one more poke to the upside. So you see how each new move to the upside brings out more stops, more stops, more stops, more stops. Even that last little poke just now, more stops. So they will keep poking until they don't take out stops, which is, of course, what happened at the low this morning. The Hawk says, from AI, not sure if it's correct, the halfback refers to the midpoint, 50% of a significant price range. Yes. So for us, that's of the day's session. Just whatever the day has done between 9:30 a.m. and whatever point you are in the day. Thank you, Kathy. She says, and it's so important that this room and Charles are dynamic, always improving, trying a new tool when really well vetted. Excellent room worth $20. Yeah, my goal ultimately with the Pirate Traders Brigade is to try to save you guys time and money. I made many, many, many mistakes in my early years of trading, and I'm just trying to speed up that learning curve for you guys so you don't have to lose all the money I had to lose to learn the lessons I had to learn. That being said, the market is dynamic. The market is always changing. This market doesn't move today in 2025 like it moved in 2020. It's completely different. If you were to just take a snapshot, if you were to go back and just replay today, November 17th from 5 years ago, you would be so bored with the market because it would move so slow and with such smaller ranges, and it would just be a totally different market that would function totally differently. So that is why I do the Brigade, because as a trader, I have to constantly keep up with new changes in the market. I have to be able to explain them, understand them, and predict them in order to implement them into my trading. And so as I grow as a trader, as I'm noticing changes in the market, there was a time where I didn't use order flow and I didn't use Bookmap. And there kept being these sweeps of the order book, these random moments where I'd be looking at price action and it would seem like it's bullish and it's going to go up, but then out of nowhere, it would drop 10 points first. Whoops. It would drop 10 points and then it would go up. And I would be like, what the fuck is this? Why does this keep happening? So I had to learn Bookmap. I had to find order flow software so that I could understand when something is just a sweep of the order books as opposed to real new buying or selling. I had to improve the information that I was digesting in order to better understand what was happening. And the same thing has recently happened with looking at options data and the options market makers. It was like for years, I just couldn't understand why certain days would be range bound, rotational days, and some days would be massive, huge trend days. And now I know that it has to do with market makers hedging and the way that their hedging dynamic affects markets. And the more I learn about it, the more I study it, the more I realize that all the BS that you hear online isn't really true. I was told this narrative that like market makers controlled the market and that they were making the market go up or down. And from observing it through the lens of the market maker data, through looking at it, in spot gamma and seeing what that heat map looks like, seeing where those dynamic changes in delta pressure happen, suddenly I realized that no, the market makers do not control the market. They don't force it up or down. They don't care if it goes up or down, but they hedge based on what it does. So if it goes down, they're going to hedge. And if it's a moment where you're in a, positive delta environment and the price is going down, that hedging is going to be support and it's going to reverse the market back up. But if you're in a negative delta environment and the market is going down, they're going to accelerate. They're going to push it lower. They don't care if it goes up or down, but they will hedge once it does. That hedging will cause the next thing to happen. And so I've just found I can't listen to Twitter. I can't listen to other people. I have to just get the tool that allows me to see the data and then spend a long time watching it and learning from it. And then I create my own analysis based purely on what my eyes have seen, on what my brain has computed. That is my edge as a trader, and that is what I share with you guys. Okay, so it's 10 a.m. I'm starting to bite into Bruce's time. If any of you guys are not members of the Pirate Traders Brigade, I'd highly recommend you check out Bruce's stream. He is the man when it comes to understanding order flow and trading with Bookmap. As far as everybody else is concerned, here's the way I see it. This morning, we talked about the fact that there was a 33% chance we were going to go up today, a 33% chance we were going to go sideways today, and a 33% chance we were going to go lower today. The odds of this moment is that none of that has changed. I would say I still lean more towards a sideways day. So I suspect what's going to happen is we're probably going to find support around the halfback right now. We're going to come back up. We're going to poke at the highs. We may even get above yesterday's high today, but I have a feeling the market will run out of steam and come back in once we do. Of course, if we get new buying up there, I'll be bullish for it to keep going. But my guess right now is that it's going to fail and come back in. If we were to head down below the chop zone low, we'll just call that the current low of the A period. If we get down back below there, there is a very real chance this market liquidates and starts to head lower. It is different now than it was when we first started the day. Why? Because when we first started the day, the overnight inventory was net short. Okay? A majority of the overnight traders were short the market. So by going down here and turning around and coming back up, they could squeeze a lot of sellers, which could create momentum up. But that's gone now. Any sellers that were going to get squeezed already have from that look below and fail of the overnight low. So if we get back down there again right now, the odds are we're going to bring in new sellers and keep going. So I would pretty much describe myself as neutral to bullish above the opening price, above 67.34, but really only to get to yesterday's high, only to get to 67.96. And any new selling below the opening price will probably take the market lower today. So I'm still leaning more towards a sideways day. And of course, if we look below and fail, then we'll know for sure it's a sideways day. But I would be cautious near those lows because that could lead to momentum to the downside. Until then, It's a chop zone. Act accordingly. Members of the brigade, let's set sail. I'll see you in the private stream in about 2 minutes. If I missed any of your questions, go ahead and head to the Discord and ask me in the Futures-Charles tab, and I will go in and answer those one-on-one when I get a chance. Thank you guys.